Greetings, market rebels. Excuse me. Welcome to this week's macro measure combined with our sector situation video. And let's see, it's Friday, October 3rd. It's, I guess, 10 after 4-ish here on the East Coast. I'm Wayne, and here's the Trustee Market Rebellion disclaimer, and here is the Trustee Intellectual Property Rights Notice from Market Rebellion. Here is a flash of last week's slide with our points kind of grayed out, but just a few that I highlighted for us so that we could kind of focus on a couple things maybe that helped us this week. And then here is really a placeholder. So I'm going to keep the same slide in place if it lets me. Yeah, there you go. If it lets me. I'm just going with Damn the Torpedoes as the headline. I'm going to leave this here because we may revert back to this. But the reason I'm just sort of doing that and then jumping ahead to the Damn the Torpedoes plus slide, which should be up now, that I'm going to try to cover, is because this was just that kind of a week where I really don't think it's possible for me to list everything and really map it all out. This week has really it's been super interesting. It was a super interesting week, super active week. I think it's going to end up being a super successful week for the subscribers and the services that Ryan and I manage, along with Greg and my son. I think it's if you just stuck with the momentum that was in place at the time, there was a lot of really good movement. But there's so many other things that were notable that I'm going to try to highlight. It's really just going to be at memory. So first thing I would note is just go to 2x on the playback. And I'm just going to do the best I can. It's obviously my voice is kind of almost shot a little bit here. Really just a very long week, a lot of just really wild and woolly action, tons of UA. I'm going to get into some of that stuff. I can see there's a typo. I thought I got an F and I typed a second E there. We'll get into this, but there's just so much stuff that I just don't even think I could summarize it in a reasonable fashion right now. So I'm just going to try to bring these points up as we get into it. And I'll just try to go through things. So on that note, I'm just going to do a brief pause, stop the share. We'll clean out this stuff and get the charts going. Move this over here. It lets me. And then I'll share screen number 3. I think it's going to be. Excuse me. My voice is just shot at this point. No, now it's screen 2. Okay, well, we will go with screen 2. Now, the strange thing about that is it's supposed to have a chart on it, and I guess it does now since I moved it over. But anyway, I don't know why that didn't share the normal chart that was supposed to. Doesn't really matter. We're just going to get into it anyway. So let me just get to the right slide over here for myself. And it looks like it's just so I don't forget to cover some things that I've got in mind, because it will already be tough enough. So what I wanted to try to do here, let's switch to more of a 3-month view on the SPY. So we just have better sort of graphics to work with, and maybe pop this up a little bit on the magnification. And then we will come into here. So what I want to get at here is that, right, this is another hesitation today, just underneath the midline of the channel we've been working with now for quite some time. This is what's going on with volume. Volume was really declining, as you can see. It was even really low today. And that was right when we got to about, I'd say, roughly around noon, roughly. And we had very heavy volume that picked up after that. So at one point, what I was getting at here is that there was some negative divergence developing between a slightly higher high, the indicators, your classic indicators down here, not liking what they're seeing in terms of a little bit of a loss of momentum, right? A little bit less momentum here. And you were seeing not so much volume going up as we were making new all-time highs. And unfortunately, the only reason why this volume bar wasn't similar to this one, or maybe even lower, which it looked like it could have been at one point, was probably because A, expiration, and B, probably because of that sell-off. I think someone decided they'd seen enough There was some incredible runs, and there was some really heavy selling that took place probably just after noon. It started and probably lasted until about 2 o'clock. So there was a couple hours there where they really laid into things. Excuse me. Probably could see that on a probably see that better on something like let's say we could see maybe that on a 10-minute chart or something like that, where yeah, you could see drifting at noon, sort of drifting lower, but then the real action kicked in at 1, and they cleaned it up by about, looks like 150. So yeah, from 1 to 2 was when it got heavy. So just to kind of clarify on that. So that's really interesting again, because we cannot seem to work our way above this mid-channel line, and we continue to have this sort of uh, in some cases incredible moves from individual stocks, but the market as a whole is grinding. It's kind of grinding its way up, and it's not always easy to trade. And I found this week at times to be very difficult. Probably from yesterday morning until, well, through most of today, the market became easier to trade with some bigger moves occurring to the upside in certain areas like AI, like in energy, like in um, other sort of quantum computing, I guess you could call it. So there were certain things that were really, really rumbling. And well, crypto, some crypto was as well. And that was some really great stuff. But beneath the surface, it really wasn't great in terms of the way well, I should say on the surface, the indexes didn't look all that great in terms of their performance, right? So they were working their way up. They were not bursting higher. We weren't getting these awesome moves. And you could see that we almost gave back everything between Wednesday's close and Friday's close. So that attempt to get up here on the Qs, it also looks rather weak, right, compared to what we've seen before. And you can see what I mean again with the volume profile, where this is sliding lower. You're not getting that dramatic buying that we're on our way to this next leg yet. And this could have been similar to yesterday or worse had it not again been for expiration and that really strong sell-off that probably spiked up the volume significantly from where we had been. So that's very interesting in that that's not really what you want to see. Not that that's something you instantly panic about, but certainly you'd want to see it more like this, right? When the market's going up, we prefer to see this volume sort of climbing and being at a healthier level. And meanwhile, it's more or less declining as we're doing this. Now, one thing that can account for that, I think, that we're getting into, and it's on the slide, it's what's happening in other places. Let's just quickly look at the Dow first, though. Look how much the Dow backed off today from the high. I mean, it's in terms of percentage, it's not a big deal. In terms of the wick itself, it looks kind of strong, right, as a back off after making this new all-time high. So they really did pull this thing back, reel it in, but there was really good stuff happening. That's why I'm jumping to here, and then we're jumping to IWM in the Dow. So in other words, it seems like the market might be broadening out, and there might be some folks that are cashing in on phenomenal scores in some of the tech, especially some of the big tech that they've had, which maybe brought some things down for a while today. And of course, you had a week that was quite good to that point with the way we were trading pre-noon in the Qs and the spiders today. It was an excellent week at that point, and then quite a bit got given back in that hour we looked at. But excuse me, but it could be, right, that this is starting to look good, and that could be drawing money to it and away from some of these bigger things. And I think that's almost the same comment I would make here, but in a different way, because it's IWM and it's obviously the sort of like the opposite, right, of the Dow, where you're looking at these smaller caps. Now, unfortunately, right, that's quite a pullback. It's quite a wick on that candle from today. And we haven't seen the volume go gangbusters, but they are working this thing up quite nicely. Unfortunately, a lot of things have gotten near or into the overbought area on the daily. We had a question come in the UOA Elite, I'm sorry, Rebel Pit Elite service, which has a live chat morning and during the trading day. And I had just gotten the question about what about if you've missed some of these moves, what do you do? Do you wait? And I just said I think I would probably just wait, right? FOMO is not a good driver for your trades. And you can come in with fresh mindset, fresh powder, dry powder on Monday, and if things are still working, become involved in them. And plus you have the hindsight of getting past what could be weekend news that could be problematic. So that's always something to consider if you've missed the move. And fortunately, right, hopefully that trader did decide to just uh, wait on things, right, because we got that pullback, and that was probably took a lot of the hot air out of a lot of things. But before that, things had just gotten overbought on the dailies, which I mentioned, in the Qs and the spiders, we had become overbought. Not that just because you cross the 70 threshold in RSI, you immediately liquidate things. I don't mean it that way. It's just that if you're trying to play probabilities and you're already had this run, right, maybe getting a little bit of a cool off and then seeing some stocks that you like act well during the cool off and then getting ready to go when the market or those stocks start to reignite, or hopefully, ideally, both. But this has made a new all-time high. The Dow made the new all-time high, and they are both maybe, I think, drawing from the big stuff. Now let's take a look at this because it leads into this comment. And so, what I would say is that the Dow sectors that we typically look at over here, which are XLI and XLB, there's Dow-esque sectors historically. If you look at those, right, this made, I believe, a new all-time high in XLI, and then XLB, we saw demand sort of through UA and some stock performance this week from XLB, and it's starting to percolate and heat up again with a higher low in place. So that's a good sign. You've got this sort of maybe ascending triangle forming ever so slowly. And if it can finally bust through, right, that would be good. So that this could be where some money is rotating into. And since we're on sectors, let's cover some of the other comments that I really wanted to make. And obviously, right, we had some really good performance from XLV this week. And so fortunately, I think there were a couple of healthcare, those types of pharmaceutical names that we had in the services. I can't remember. It's really been that kind of a week where it's extra hard to remember everything because the paper was just tremendous. And just looking at so many stocks, it's really not easy by Friday to remember where you saw what doing what and at what level. But XLV obviously had a stellar week to really jam the way that it did. So that's normally defensive, but I wouldn't necessarily read it there. I think other developments really brought this about. Now, a little bit of a concern is the fact that XLY, which was looking again on the cusp of taking out, at least testing this high, this backed up the last two sessions after getting close. So that's a little bit of a, let's say, uh, gray cloud rather than a silver lining. But if you notice here, XLP did not do all that much. So it's not like the market took a defensive shift in the consumer area. It's kind of more like, right, this is sort of treading water, and this thing is sort of disappointed yet again. Now, it could end up being, obviously, right, this could end up being a double top. It has the M look to it. It could be a problem, so you want to keep your eyes on that. But at the same time, you're really not panicking too much, right, until it's threatening to take out the support back from last week's low. And it's could happen early next week if that were the case, but you'd bust below an obvious support line that we could draw there. I'll just put it in there. But as of right now, it's not horrible, right? It's not horrible. That could really be a problem there. Probably could pull one from here if you want on this sort of reactionary low here once it started to move up and get that one right there. So it's a little concerning, I think, right now, that you could start losing your second support line that you would have drawn. And that would kind of start taking you down to other things. But as of right now, let's see what happens on that one, see if it can hang out. If it does, though, that's probably not a good sign for the market, given right how important the consumer is and so on and so forth. So keep your eyes on that for that reason. you could see that the demand for power, it just continues to, we had some names in this as well. So I believe they did quite well. I know we had the NEE recently. I don't even remember when that expired. Honest, I was in it. I think I may have mentioned that. But anyway, this area obviously very strong. And interestingly, right, tech was strong, really with a new high in the XLK. Those are sort of somewhat related and joined at this point because of the developments right within those areas that a lot of you are very familiar with. XLC though chilled, right? This thing, which was a real leader, this really remained in chill mode. So that can tell you what was really working at one point this week tended to be the tech, the AI, right? Crypto, quantum, uh, all that type of stuff was really working, and the power generation required for a lot of these things. The interesting thing, though, is that we did have paper, which I'll show everyone. We had paper in XLE. I've got an idea in on that one, related paper in XOP, which we have an idea on. But I think for me, right, XLF, we also had paper, which I'll cover. And I think this is getting interesting between XLE, XLF, and XTN. And that's really what I wanted to get to the most, is because XTN and some names within it that we can cover, this suddenly started coming to life. And this along with IWM have been some of the main missing elements on this whole thing really broadening out, which is what we're getting at here. They could really be broadening out and sort of, as I said a few times, leaving some of that the incredible performers in the big tech space that have really had incredible runs, and they could be rotating into these things, thinking, right, that somehow this economy is going to start really turning it around and we're going to see positive developments. And so the only thing I guess I haven't mentioned is XLRE, but there's really nothing to write home about this week in there anyway. I did have some paper again in XHB, which again, we can try to look at. But bottom line is, right, that if you look at these sectors with XLU and XLK and the other three, the big three for saying, hey, things are looking better, with the paper we saw, that gives me some hope that something could happen. Now, there wasn't a ton of XTN paper, so I can't really, that was kind of a missing element. But the concerning parts here, and while these XLI and XLB are also looking constructive at the moment, but this XLY, that's probably our main source of concern right now. And your other main source would probably be XLC, a former leader, really giving a lot back. Now, that's not the end of the world given how well this has performed. It's not the end of the world given how much of a run it really has enjoyed. And if money shifts out of there, again, it's not the end of the world. But we need to see other things take over. And I think XLE, XLF, XTN, those are three that maybe are close to doing that. If this market's going to go higher, they could be ones to watch. And XLY, now XLF is not normally a great mover, but still, just in terms of watching for market health and development. XLY to me, though, that's concerning. So that's where I would I would always draw your attention that way. Now, excuse me, probably given what we've been seeing, given what's happening, given the UOA, which we're going to flash, it's probably not a great idea to skip over SMH, right? So SMH, we saw paper late here. We don't always see a lot of SMH, but you could see, what a tremendous move again by SMH. And so we did see some paper. You could see that there's an alert in there. I guess it might have even, I had an upside alert as well. I'm going to put it in there I don't want to forget over the weekend and then miss out on it. So let me just get an upside alert in case we come out of the chute on Monday, really trying to power. But I can get into this anyway. You can see on the Bollinger Band aspect, it is extended. On the RSI, it is extended. On multiple time frames, it is extended. So it wouldn't be out of the question, right, for this thing to have a little bit of a pullback. And that's one reason why when this UOA hit and the stock, well, I should say the ETF was trading at a higher level, I wasn't in a major rush to put that one in. Now, individual things I would. So, for example, MU, this is this is about to leave, move beyond the Oort cloud and head into interstellar space at this point. I mean, the week that it already had, like the week that it had was just amazing. Now, paper showed up. You could say, well, that's definitely call buying. That's a hedge. Could very well be, right? You could see how extended this thing is. You could see, again, it's much like SMH. But again, some of these things, when you get into the phase we could be on the cusp of, where you're getting into that melt up phase, it may not matter. There may be a whole nother leg, that could develop here that could really take this thing up. And so if you're in a mania, or at least a very short term, maybe mini mania, right, that we're about to maybe head into here, I don't really want to miss that, right? I'd rather be ready, give traders the warning that let's put this within context, right? That you're playing a game that you probably lose at a lot. If you wait until stocks get into, let's say, 82, 83 RSI readings on multiple heavy duty time frames, you probably lose more than you win because it's just extended. But the way that things are working right now to this point, which could change at 9:30 a.m. Eastern time on Monday, but the way that things have been working to this point, you have to I think you still have to be willing to go with it. And that's one reason we've kept that on the slide for the longest time. There's still plenty of upside potential here because when they get things in this mode and people are, first of all, there's just a lot of FOMO. There's a lot of public participation. This stuff can carry on for a long time, as we try to highlight. And there still seems to be a lot of folks that are underinvested and that really are in need of chasing this now with less than 3 months to go. And that's really been our main argument for what's pushing this higher. It hasn't been rate reductions, right? We've only gotten one of those. It certainly hasn't been incredible economic performance. I don't think we've seen incredible economic performance, but it does seem like the AI, either the AI, whatever, but all that type of AI build out, and maybe the reduction of, unfortunately, folks manning positions and AI supplanting them or replacing them, that is potentially a bottom line driver. And that, again, it comes back to, right, how well their company's doing and maybe not the reasons why they're doing well. So all that type of stuff we've been talking about, and I was reluctant, in the first couple of years of all the AI hype to really say, like, is this really bottom line difference making stuff yet? But, and a lot of people are saying it still isn't. But I have seen more reports than I did at one point that it actually is. So it's hard to say for sure, but given I expected it to be at some point, just it's hard to know exactly when. And I feel like now, I feel like there may be some legitimacy to the bottom line arguments that yes, it is becoming more bottom line helpful, and that's obviously going to lead to, right, no salaries, no benefits. How everyone affords and how folks afford things when they're sort of cast by the wayside via technology or due to technology. I'm not sure how it all works out if they don't have the income levels to consume, but I guess buy stocks first and ask questions later. But anyway, that's extended. I would trade this on a short leash. I have no problem putting the idea in though, because you just don't know what's going to happen. One of the things that not only was I've been in Rigetti and I've made some money on it, but because I'm so busy and I know when something goes into a consolidation, I'm ready to um, I'm ready to like wait for it or kind of get out of what I've got or neutralize my risk and wait. And you could see what happened the last couple of days. These move. This is what I mean. You have this massive move, right, and then you have another move. So who's to say, right after that consolidation, who's to say that MU couldn't tack on more after it consolidated after this initial burst from the 50 to here? How do we know it can't keep going? I can't say that it won't. And so this is super frustrating for me because I'm too pressed for time. I can't complain about making money. That's kind of ridiculous, I guess, but it's just the fact that I planned on getting back in some of these things and just I can't always get the time to even set up an entry bot to get myself in because I'm too busy analyzing other names, and it just, you look back and you're like, damn, that's how fast things are moving right now. And this is a great time to make money. There's a lot of great opportunities. And that brings me to roll, roll, roll. So let me just show, I should hope to show this. So let me see if I can. Okay, so wow, there's some, and I even have a new Rigetti idea in here, by the way. So let's take a look at some of the stuff I've been talking about. And we had an idea. Well, I don't want to go through all these. I mean, it was just incredible. But some of these were just incredible. But here's the thing. Let's take a look at coin. And I think was a Tesla idea right the day before that. There was a Tesla idea. But trying to think of when that came out. Uh, when did I get that one in? Oh, no, that's an update. Okay. So I guess I put it in the week before. My bad. Maybe it was late the week before. I don't know. I should just do a search at this point. This is stupid. Okay, so yeah, it is stupid. So let me just do that. I'm just, I got to admit, I'm just kind of wiped out at this. Wait a minute. Where's our Tesla idea? That's weird. Why is that not showing up? Okay, I'm baffled on that one. Almost feel like it's missing. Let me see from our log. Oh, that's funny. There it is. Yeah, so I put it in on 9:30. I guess I skipped right past it, so my apologies on that. So let's just go to this. We don't have to go to all the details. So the top target level was about just about 480, and the trigger level was 443. And this came in, I guess it was Tuesday. So let's take a look. Oops, let's take a look at that chart. Here's the chart on Tesla. Tesla. So this thing goes up from Tuesday right there, right? That's the 30th, and it triggers that day, closes above 443, runs up to 470. So it didn't quite make it to our third target, but makes a $27 run right in two sessions. And so starts backing up a little bit, and this is the whole thing, right? You're outside of your Bollinger Bands. This is my upper Bollinger Band right here in the dotted red. You have a little bit of negative divergence going on right at that point where you could see your RSI is tailing off and your price is still going up, right? And your RSI reading, even at that point, was still 74. You're already in overbought status still, right? You're stretched above your Bollinger Bands. So this is, I found out that some people were uh, were like, oh man, I gave so much back. This is what I mean by roll, roll, roll. Like this thing just didn't just start out, right? So let's just go back about a month, and the stock is a $325 stock, and now it's up. You got to put this stuff in perspective. This thing is up $145 at that high in about a month, right? Think about that price appreciation of going from that to that. So where were we right there? Okay, yeah. So going from that to that. So what would that be? It's about a 40%, isn't that about a 40% jump in the stock price in a little bit over a month? Right? So putting a massive company jumping like that in perspective, technically, if there were positive fundamentals that you wanted to assign that to and you think it's justified, okay, that's great. But I don't know if there were. I don't think there were. But the point is that you've got to roll, right? When this thing gets to this point and you're stretched and your RSI's really overdone, you're not getting through the mid channel yet in the market. You've got to do these types of things. And that way, right, if you do get this kind of a situation, you don't give too much back. Here's an example. We also had a bullish, which I'll show in coin. We also had a bullish hit in coin. And I don't even remember if I pounded the table on coin. I was in coin. I don't remember if I pounded the table on it. And I don't really pound the table. Everyone knows that. But I don't know if I mentioned it is what I'm saying last week. But I really thought coin, it looked very interesting. I thought crypto looked interesting. And when I came in for the week and the way things were starting to develop, and you could see the coin move. So let me see if I can bring up coin. So yeah, let me see what they bought, by the way, here in the Tesla idea. They bought, and this is what some people complain about because I'll hang my hat on a trade of something way to the upside out in 2027. But what I think a lot of people have bought into, oh, I didn't even realize that this thing got above. or got near the high strike that we had selected for that. But you have to roll your in the money at that point up. When you're in the 450s and it goes $20 past there from $7 below there, you've got to get that thing rolled up to like the 460s or the 465s or something to try to just put profits in your pocket. But and reduce your risk just in case. And Tesla's the kind of company that can make news right quite frequently as well. It's another reason why you have to be disciplined when you're in these things. Anyway, they bought that type of an option, and I hang my hat on these types of things all the time. And people think, well, that can't be smart money because why would they buy all the way out there? Why would they spend so much money? Why would they do a spread? There's all these objections, but my argument is that the timing of what they do is often much more important than the actual uh, positioning that they do. A lot of times these guys show up with their rolls. In other words, they're in something and they'll roll, and that's right before the stock pulls back. So if they've been riding something, what they're trying to do, I think, is they still like it. They don't want to have such heavy delta to give back a lot more on a pullback. So they roll up significantly, and that'll reduce their delta and lock in profits. And you just don't know how things can change. So it's really just a smart way to approach, in my opinion, it's just a smart way to approach your management of your options positions. You don't have to overroll all the time. You could stay in heavy delta calls, but there's ways of being smart about what you do and taking a lot of money off the table while reducing risk and setting yourself up not to give so much more back. Excuse me. So let's just look at coin. The paper came in the same day, and we got the idea out, I'm assuming, the same day. So let's see on the 30th if coin, excuse me, let's see if that's the day we got the coin in. We had, there's the Tesla. No. Was it the day before or was that an update? I know we had coin too, so I'm not sure what's going on here. There's coin. My bad. Yeah, it is that day. I don't know why I'm missing these. But anyway, there's coin. There was the trigger. Okay, these are the targets for it. It was a front week contract to boot on top of it, which makes it much more interesting. We went with this super wide call vertical because I thought, as I said, I thought the stock had tremendous potential. Right, that just was my technical take on it for a variety of reasons. But anyway, higher low, start slicing through all your SMAs that a lot of people follow, right? You get through here, you're in the clearance, you have gap fill potential, all that. These are just some of the things I thought looked very interesting. Clearly still on an uptrend. You can go on and on and on about why this, I think, had really good technical qualities. But the whole point is that if you buy those 335s or 337s and you sell the 367s, when you start getting into Wednesday and you're in the front week, right? All you need to have happen is a little bit of a pullback where they come back and they decide after this breakout above the SMAs, that is, they're going to come back and touch them for a day or two before they go. Again, and that happens very frequently, right? Where you see something break out and then it breaks out and it'll pull back and touch an SMA and then hold it and then go again. Very common. I don't really trade SMAs, but I know a lot of people do, so I use them for reference because so many people can latch onto that. But anyway, the whole point is, right, when you're playing, not that you couldn't roll out, but if you're playing with a contract with 2 days left, or I should say contracts with 2 days left, can you really afford to suffer through that kind of a retest bounce again, that kind of scenario? So which I don't think, obviously, I don't think you can. So what you do is you pick up that 337, and you get up near here, and you might roll to the 350 and be happy to have a $17 wide vertical on at that point, right? Where you lock in money on that 337 that you bought, and you now have the 350 against the 367.50. And this way, right, if it keeps going, you can't tell me you're still not happy. I mean, when you have a $17 wide vertical spread on that maxes out at the close, you should be, I think, fairly happy, right? So these are the kind of things that I don't even get to cover. We don't have time to cover this stuff. I just hate to see when people give money back, like in a great move like Tesla. And that's why I'm covering it. But here's the other side of it. If you want to complain, well, I could have made more money if I stayed in heavy delta. Yeah, but you made money halfway through the move nicely on heavy delta, and you still made good money all the way up, right? When you after you did your roll, you still are still crushing it. So it's really a tough argument to make. No, I shouldn't do this, and I just hate it. I think people, first of all, you want to see people benefit from the work that you do. That's the whole reason why there's services, right? Why spend your time doing this stuff if people aren't going to benefit from it? So that's our goal. And then you'd hate to see people put money at risk, work hard, keep their eye on something, work hard. I mean, watching something, managing it, and then falling asleep at the wheel for just a few moments, and then they rug pull you, just like they did, this afternoon in the indices. You've got to be smart about this stuff and discipline. And I think it really will matter over the long run. A lot of the roles that I did lately really didn't work out in terms of making me more money. Some of them did, but not a lot of them didn't. A lot of them I would have just been better off. Uh, I would have been better off just taking the money and running rather than doing my second or third role, right? But that's probably because we're not getting super forceful index behavior. And some of the stocks that was in, they're low dollar ones that had UOA that I got involved in. I'm still, as a matter of fact, I'm still involved in. One of them is Plug. I'm still involved in this, right? But when this thing did this burst, at least I had the discipline at this point right here on this day. I did something in terms of rolling up, right? I don't even remember if I rolled up. I can't remember if I rolled up before then, but it started really lifting off. I was in it. I rolled up. I had to suffer through this, but it was a lot easier to suffer through the pullback and then this reversal because I didn't stay in my original contracts. I went up, I think, believe it or not, I think I went up a full dollar in strike. So the delta difference was significant. So it hurt to give money back on my roll, but I waited. I still have plenty of time. So I waited it out and look where it is now. But when it got to about 380 today, somewhere around there, that's when well, I guess near the close, actually, I rolled again, right? Because this is another leap. Remember, this is a rinky-dink stock. This stuff these moves and these kinds of things can be ephemeral. My target's about 415 for this thing, and it's getting close, right? So, not to say that it can't exceed that. My hope is that it does, of course. But and by the way, I may as well show this now that we're on this. I can't even remember where we got into that one, but I'll try to find it here. But I'm going to try to go into here as well. And we're going to take a look at all this plug paper. And this is the power really of repeat repeat buying. And you can see all the updates. Look at all these updates in plug. This is all call buying. So yeah, here's the original. Look at this. Yeah, I didn't even remember how far back it went. That's why I'm saying, look, I might have even been in the ones or 150s. I think I was probably in these initially at 150. Look at the hit. The way everything was setting up. The short data we were able to find. Nothing special there, but just the short data, the way the market's been acting. The technical patterns that are in place. The other parts of the technical setup. Just a massive hit. And you can say, well, who cares? It's 65,000 $2 calls in a rinky-dink stock. They're dollar cheap. How much capital is really being put at risk? But I look at it differently. Why does someone care to the tune of $65,000 contracts in this stock that's been forsaken by the market, right? But just look at this. You want to talk about, does the UOA help keep you in a name that you're in to keep riding it? Tell me what you think. I mean, would you keep riding this? If you keep seeing people buying 50,000 lots of upside calls, would you buy it? And things like that, would you buy it? Would you stay with it? This is what helps, I think. It's not that they're always right. It's just that I've seen this enough times where I know that it's a good sign if they keep coming after it, the higher the price goes. It usually I would say keeps going. You've got to still be smart about it because you're going to suffer like I did, suffer through a little bit of a drawdown on a roll. But overall, right, it's been really a good little thing. Now, let me think about a couple other ones. So we had, I know someone wrote to me too about couple different ones they needed extra levels on, because some things have just got, this is what I mean, like some things have gotten silly, and you've got to be able to take advantage of these phases when the market does get silly. I don't know if this was, oh, it's not showing up there. I know we had LAES. I remember we must have put it in UOA Essential. So it must not be in UOA Pro. So let me take a look at it. Okay, so they came in, they bought these contracts right at, out of the money, even further out of the money. um, This one was out of the money as well. But this is a great example of, people will say, well, why would smart money go out to January? Why would they go out to January, and especially like by January 6th? I couldn't tell you. This is a roll up here. But I mean, why are they doing that? Why not just buy like the Ox and regular Ock, and you have to put out a lot less money, and if there's going to be a score, it could be they think the move's going to take longer. It could be plausible deniability. Well, we didn't know. We didn't know whatever news is about to break. We just, we thought the stock had some positive qualities, and could see kind of a wild looking modern take on the old cup and handle pattern. It had one in here too that didn't even really go with it, with kind of like a compound handle there. It's back at it again. Maybe it will go this time, but obviously the kits came in with the stock much lower. Again, lifting above all your SMAs, doing a little bit of research on it, and this, lo and behold, this thing took out all the levels we had for it, and so we were getting requests on more of them. But that's the thing, you're getting little rinky-dink stocks that are making these kinds of moves, that you can't really, you can't complain about. So I just wanted to highlight that. I also want to highlight some of the other paper that I really think it's important to show. And what I try to do in these services, let's just go through it here, but this might be faster to get started at least. So here's the GLD. Now we've been seeing all the way up, and we've been covering this in the videos and had these long side bias in these metals names for literally years. I might be coming up on year 3. I know we're at least into year 2 at this point, but they just continue right into to participate in these ETFs. There was GDXJ paper. I didn't even get that in. It's been that wild and woolly that I couldn't even get to it. I'll bring that up. But there was GDX paper. I know it came in. There it is yesterday. So they're back for that. There were other names. I think we had SLV this week. I think. Let me double check on that. Or it could have been heavy last week in SLV. No, we did have some. So there you go, more SLV paper. There you go, earlier this week. It feels like last week, but there you go right there. Look at all that paper right there. They just continue to do this, and this has been going on and on. You could see that it just keeps following the price higher, right? They just keep coming after it. This goes way back to where this thing was in the mid 20s, way back, and that's so. This has been a big story. The charts did not lie in this case. But yeah, the metals have been a big part of that. Let me show you I don't think I've got time to show XLE in terms of the idea that I put out, but I'm just going to do a quick search and show that there's this big buy out there in Jan in XLE, and there was another buy here that follows the other buy here that we saw that was a short term, or somebody was maybe trying to catch a really quick pop on that. I don't know. Here's another smaller XOP hit. XLF, there was a hit here as well. I say there it is. 72,019 deck 56 call, slightly out of the monies. So somebody bought those. Then the other thing is SPY. So I have not seen SPY with a lot of paper lately, especially the bearish paper. And we got this one here today, and I was able to I've been trying to put bearish ideas in against the trend, which is something I don't normally do, but we try to do that more so in these major index ETFs, so that traders have something that they can potentially hedge their portfolio with based off of UA, an idea that's already sitting there in the log, they can go to or reach for when the time comes to, based upon the fact that someone else was thinking there could be some downside. So it's a good thing, I think, to have in our log for a hedge. But this picked up a little bit, and then we had this as well that I want to share because I think it's important, just so everyone knows that, excuse me, there's been this massive hit today in VIX. So someone bought the 60s for 51, and they sold the 100s for 21. So I guess they're thinking, all-time high in VIX, spend 30 cents, and so maybe they're changing their name to 30 cent. I don't know, but they spend 30 cents, and if something catastrophic happens, I guess they have a massive score. That's the way it is. But there's been some big players showing up in this month and also in November, right? I don't know what just happened there. That's not good. I feel like my monitors just kind of crashed out on me. Not sure why. Hopefully they're going to come right back up, and they did. So I just wanted to share that. I'm not trying to be super thorough or something like that on there. It's just that I really think that um, there's so many other things that I could show, but I just wanted to do a little bit of a smattering on things. And what I may do is just peruse this, and then we'll get back to the other things I really want to cover. Like I said, this is a messy sort of do the best you can week for me because I don't have time to really uh, pull it all together. But there's another one, like this laser was another one that was a low dollar that's already started to lift up a little bit, those kind of things. And I don't really want to focus on those things, but the reality is that some of these things are really popping dramatically. And we've had some really, really great movers on this stuff. And I wanted to see if there was anything else that was worth mentioning on those, but I don't see any of those popping up. I don't remember if I talked about it, but this leads into my next part of what I wanted to talk about. We still have those cannabis stocks like Tilray and other things that are a part of it too. What I wanted to talk about, getting back to certain areas, is XTN. So I want to look at this in a little bit bigger way. And here's XTN right here. And you can see that this is nascent, right? There's nothing really incredible. What am I doing? Yeah, this is transports, right? Yeah, I wanted to make sure we were on transports. So this is not incredible, but you can see this is a series of higher lows, and you kind of have that ascending triangle look here. And so this is one of those missing elements we've been watching. So I just wanted to let everyone know that this thing seems to be, right, if the market stays positive overall, this seems to be trying to creep up towards important areas. And that would be really, I think a lot of the Dow guys would really love to see this thing finally start to go, just like everyone wants to see IWM go, right? Which is seeing that confidence from, you could see that on one sort of like money flow type measure, they've really plowed into this. So this is going to be either, right, great disappointment, the agony of defeat, or it's going to be the thrill of victory if this thing really goes. But like I said before, I think this thing has probably got about, well, 50 puts you to about 295. I would give you another from there. Yeah, I think I think you're 30. This thing's 30% undervalued if it starts to catch up. So I just wanted to make that point. But this is getting up there towards, right, it's above the mid channel. This thing's acting a little bit better, and it's working its way up to the top of the channel. But this is a good sign. Related to XTN though is the UPS, and I just want to put this on everyone's radar. I don't even remember if we have paper in here. I think we do. I have an idea, or wanted to have an idea, or did have an idea. I can't even remember. I'm being honest. And this one to me is starting to look interesting. So it's very premature. The charts haven't really turned, but it's kind of reminding me a little bit of Dow. And I told you all, I think I covered this in one of our webinars this week, where I've got a little bit of a ratio diagonal on in here. I'm not normally a bottom fisher, but I'm starting to see some positive qualities here. I thought I could sell some, excuse me, out of the money calls, buy in the money calls. So I've got a very heavy delta diagonal on right now, but if I can get to the 17th and the stock stays below 25 and a quarter, then I'm going to be in really great shape. And I got started near 23, so I can't remember exactly what the price was. But the point is that year 23, the stock has to go up 8 to 9% before it even starts hitting my short strike. If it doesn't, I keep about on the rights that I was doing, I would get about an 8% return in just a little bit more than 2 weeks, right? So that's not bad, right? Where you can collect 8% on the right, if not if the stock essentially sits still or moves up slightly, and if it keeps going, even better, right? So that's what I'm looking at there. Obviously, the trends have not changed yet, right? So there's still that's still mired. It's a little risky. I think it looks technically cheap to some people, so keep that in mind. Is another one that you might want to look into for the. I think I have the. I can't remember. I think I had the deck 20s against the OX 17, 25s, and 25 and a half. The FedEx is looking good though. I think other than maybe a little bit of short-term overboughtness, which you're kind of brushing up against overboughtness on some of the heavier duty intraday charts, but this looks good too. This is what I'm talking about with XTN. So this is my simple way of doing things where, I start to see that sector flash a little bit, start to see a little bit of paper here and there, and then you start to see some of the individual names. This stuff is starting to look good. And I would note that I saw an interesting uh, piece from a gentleman that I think focuses on sentiment quite a bit, but he's overall, I forget his name, but I've been following him for a long time. And anyway, he's making a good point, which is that in terms of seasonality, this is the period right now to the end of the year where transports tend to shine brightest. So you can obviously extrapolate why, but yeah, you get the idea there. And so this is probably not something to laugh off, right? We probably should be on guard. I'm just hoping the algorithm in our team spot some paper in UPS and FedEx and other transport names, because I think the charts are very close to being on the cusp. And with something like Dow, it's just so beaten down, so cheap. It might even have poor prospects, et cetera, et cetera. But I feel like if they keep jamming this market, eventually they look around and they try to find things that have been left behind and they start coming for them. And so even a nice move up into the mid 20s, which would not be out of the question. It seems like something that could happen quite reasonably. That to me would give you a really nice return on this kind of a strategy. I'm going to basically have 85 delta working for me up 9%, and then I'll be able to either break even potentially or collect on that on those calls that I wrote. So just wanted to keep that in mind. So that covers a lot of those things. So we talked about, let me pull this back over. So I'm doing this, as I said, I'm doing this from memory. We talked about the three sector discussion, which was XLF, XLE, and XTN. So we talked about roll, and how when you do get really vertical, it's wonderful, but it can be dual edge because you can bounce just as quickly as you fell, and you can roll over just as quickly as you went up. And we saw that really in a couple of names this week, and mainly the one I showed was Tesla. XLF we covered along with, I'm sorry, XLE and XLF we covered. So you have that. I did show some of the UOA I wanted to talk about. Let's take a look at the market breadth while we're on this. We'll come back just to make sure we're covering things. But if you look at the market breadth right now, I mean, I think that's the interesting thing about this week. Like I said, I think this is an extremely interesting week from what I do, because this has had a little bit of everything. Really just very interesting developments. Look at this McClellan oscillator. And this thing started to we saw it last week, and look how it's really started to improve and work its way up. And this action is finally helping with the McClellan summation. So that's leveling off here. And that's a good sign. And you can see that the new highs, right? These new highs, new lows, this net, right? This has been picking up again. So that's good. That's obviously good. So I think there is sort of this broadening that's being attempted. Look at this normalized new highs, new lows, right? So this stuff is all starting to improve again. here we are with this kind of weird week where, a lot of these big dogs, which we'll talk about, didn't perform. Stocks are getting there. At least the trend is a little bit better here for stocks above the key SMAs 50, 100, 200 in the SPX. And then you can see the advanced decline cumulative average. This thing is moving back up again. So this is good. I mean, these are all good developments right here. And the sectors, like I said, on balance, to me, the sectors look pretty interesting and on the positive side. Again, I'll reiterate, right? Because this to me, XLF with just a little bit of work could start breaking out, and it's got a lot of energy potentially stored up because it's been basically sidewaysing for so long. I mean, look at this. You go back to right before Independence Day. The high on pre-Independence Day is 53.27, right? And here you are today with a 53.38. So you were almost unched, right? Yesterday you pretty much were unched from all the way back there, which is 3 months ago. So this thing's gone nowhere fast for the last 3 months. There's plenty of energy stored up there. XLE, the paper I'm seeing seems to think that this energy space is going to start doing better. It's been incredible in terms of, we talked about this, I think, last week, fits and starts. It just continues to cycle up and down, up and down without being able to bust out and really sustain a lasting trend. You got a nice little move here, but ultimately those just fizzled and reversed and brought you back down sort of the lower end of the channel. You start to see that things are starting to uptrend a little bit there. So that's a nice little touch on that, right? Nice little development, but it needs to do it. And that's why I'm in the camp of, if it starts to show a little bit, if it starts to just show a little bit and start going, if this thing can move up to, the low to mid 90s, so 93, 94, it's going to be on the cusp of really shifting the charts, in my opinion, to a very positive stance. And you get that flowing. You've got transports flowing. You have energy flowing for various reasons. You've got the financials flowing, which would be a very good sign as well. You get all that happening and you're in good shape. Similar situation as you would expect in XOP. This one is a little bit more of a mover, right? So the liquidity is typically not as good, I don't think, in the options, but this is a little bit more of a mover. And that's why I included both. You'd say, well, they're redundant ideas, and they kind of are a little bit, but they move a little differently. And this one has a little more vigor at times, I think, to its movement. So it's got a little bit more explosivity. So there's that part of the discussion that I wanted to cover as well. So if you look at it with these things being close, maybe not ideal, but they're getting closer. If they start participating, then that may take the pressure off of what I'm calling the mag whatever, because who knows what that definition is these days. So let's look at all these stocks in here. And you can say, well, we can add, other things to it. Why don't you have this one? But I've got the Mag 7 as they were called. And this is the interesting thing here. Look at this, right? Those are not really helping right now as a package. They were looking great a couple months ago and weeks ago. We had some, I think, good moves in them. But you could see, and I've been away from them, other than, I think, maybe we did have a Netflix. I'm sorry, we had an NVIDIA trade that was a good one. That someone was trading this week, as a matter of fact, still, because it was a little longer data, but I kept it out there for whatever reason. I thought it had potential. I probably kept it out a little bit longer on the expiration, but the Apple also, right? And that we had a little bit of discussion about, I think Apple could just as easily correct as it could continue to go, but I think I'm more in it's 50-50 because of the type of market we're in. And normally I'd say Apple needs to pull back at this point, and there's probably 70-30 that it pulls back and rather than goes higher. But I'm more in the 50-50 camp these days because of what we've seen. If the market doesn't pull back and it continues to go, I think Apple's going to continue to go. But think about this, right? This is what I'm getting at with this rotation we discussed, because this thing it's just not helping right now. The whole package is not helping. So think about that, because that's, I think, the hint that things are broadening out, and the XAU, the whole works, right? So something is up, right? Because this type of action in this kind of a space, something, as I say, we've said this for a very long time. We've been bulls like for way back when, so it's all working in our favor. I just want to raise the question of what's going on here. I think there's something different about this situation. I don't know what it is. The fact that this is so relentless right now you could say, well, there's inflation, but I don't think it's just inflation. I think inflation has leveled off. Prices are still high. It's been incredibly deleterious for regular folks, right? The regular folks out there find everything to be so expensive, and it's really criminal what's happened. But of course, that's legal. But bottom line is, I don't something's up here. Um, I would look into it. That's my take on it. I don't know what it is. I would look into it. So let's make sure. Let's go. We did that. Doing the best I can. We talked about the three sections. Oh, let's talk about we talked about the low dollar in certain names. We got to cover the long-term view. Um, we're gonna cover the long-term view here. We talked about low dollar already and long-term view in crypto. And so yeah, so you saw the coin. There were other names we had recently. We didn't have these this week. I was disappointed. I really wanted to see more paper. I had been riding this clean spark for some time. Got a nice move out of it. Then I rolled the clean spark, did the same thing as plug, pretty significant pullback. I was in lower delta calls there because of the roll. It didn't hurt as bad. Let me hold on. I got lucky. And by the time they were about to expire, they kind of burst it here in my favor, right? So that's another one. We had BitDeer, BTDR. There's a couple new ones in there. This one, you can see what happened here. So this one was in our UOA Essential, I believe, maybe last week. And I believe it was still active. In other words, I think the contract that Ryan selected for it was still active. But I think the reason it went in there is obviously crypto and what we thought the charts looked like and the paper we were seeing combined with the paper in that particular name itself. And then here's Bitcoin doing its thing. And so they did what they often do, in not only in crypto, but well, really almost everything. But they put this scare together, right? This quick scare together. Where it's like, oh, this is ugly. This thing's getting walloped. They take this thing down. They flirt with this, but they got it below the 100 day, and then lo and behold, right? They do this indecisive candle here, and then lo and behold, you're ripping right back up. And so this is them being them. This is what they do. So that's why, right? It's worth, even if you're not in there and you happen to spot this kind of an action, right, where you plunge below, very obviously, probably widely followed SMA like the 100, there's nothing wrong with just doing this, right? Depending on your platform, right clicking, right? Just do an alert, right? Just put that alert right there. Just let me know. So that way you can, right? That way if they do the old turn and burn back the other way, you can get a heads up on it as they're trying to run that little maneuver that they run so frequently. I mean, that is just that shakeout maneuver in its various forms is something that's just remarkable. So the final thing I guess I want to talk about without getting into any specifics, because we are running super long here. I think it's going to be, where is it? Maybe on, no, I don't really want to do that one. Is it this one I can do it on? That is not the one I can do it on. Man, sometimes I just get so wiped out by the week's end that I don't even know what to say. So I think it was on here, and maybe it wasn't. Well, let me just take this down. Let's get ourselves a nice big chart to work with. So what I want to come to here is this. So what I did was I've gone to a yearly chart, and you might thinking like, what the heck here? But somebody raised this on somewhere, and I'm like, you know what? For somebody that likes to look at long-term charts, I'm a little overdue. I haven't done it in a while. And so this is the long-term trend, as you can see. And so that's the resistance side of the equation there. And this is super long-term, obviously, that we're using. Each candle essentially is representing a year, right? And if I get a good line on here, I think I'm going to do that right there. And so let me just do a little bit of tweaking on that. And I'm not going to bother doing our mid-channel thing, but That's probably not bad. I'm willing to draw through that one wick and kind of frame it that way. So you could see that it, well, you know what? I am going to put the mid channel in there because I think you're sort of just getting above it. I think you're sort of just getting above it here. So yeah, I would put it right about there. Right about there is good, I think. And so you're getting above that right now. So that's, that's a good sign. And so this thing, has that potential on the SPX to go up, significantly from here. So you know me, I'm not going to argue with you if you raise a lot of concerns about, well, wait a minute, look at all these, this is crazy, and so on and so forth. And I think there's really great arguments that you could make. Um, I'm sure you could. And I think there's probably a lot of validity to what things you would say and cite. But I'm just going to say that the charts are the thing that has lied the least to me that have to do with Wall Street. Most of the rest of Wall Street has lied to me much more frequently and efficiently than the charts. And so if I could try to take that, just draw that for there for now. So to me, like there's the Dow, and there's still, you would say, well, what's the guarantee that it's got to go up there? There isn't any. There isn't any, but just trying to frame the action, this to me still has a ton of upside. So you might say, well, this is a mania, but you'd be right. But I just would remind everyone that thinks about it that way and is concerned, and I would be concerned too. Like I think it's right to be concerned. I'm not trying to, I wish maybe I could do NDX. Will that give me what I want, which is longer term? Yeah, so that's what I wanted to get at. So I moved it too much. We might have to, come on. Boy, Thinkorswim gets really sketchy on some of this. I'm going to have to just deal with it like this. But all I wanted to bring up was, right, I forget when Greenspan's comments were, people started voicing probably rightly so, that things were starting to get crazy in 97 and 98. And all I can say is that there was probably a lot of people that agreed by the time you got to 99 that things were utterly ridiculous already in the market. And the NDX closed at 1836. At the end of this is a yearly chart. Boy, this thing's getting sketchy on me. At the end of the yearly chart, it closed at 3708. So when things were already ridiculous in a lot of people's eyes, and I remember those days very well because I was astonished at what was happening, just astonished and just utterly bewildered by the fact that people were making the argument that it wasn't expensive, right? That stocks were not overvalued. And then you had really an 80% pullback from that point, where you in I think it was the NASDAQ composite, I think it was, that pulled back from about 5,000, I think it was, or something like that, to 1,000 or something like along those lines. Anyway, you get the idea. But right when you got to 99 and people thought it was utterly ridiculous, then you ended up in a situation where you doubled. So that's all I'm going to point out, right? Here you are in 98, you close. What am I thinking of? That was at 5,000 that dropped to 1,000. Why can't I might be thinking of the wrong thing, but I apologize for that. But 2,200 close, and then you get up to your high was 41. So you nearly doubled here on this one. Before cratering, before dropping from, well, there it is, 5132, and you drop to 1108. So there's your 4,000 points I was thinking of, as a matter of fact, right there. 80%, corrective action. So not to say that that's due. I'm just saying that if you pull up your stakes now, and we do end up in that kind of a market where they turbocharge this thing beyond everyone's expectations for longer than everyone expects, the kind of moves that you'll see will probably take your breath away. You'll be, if you haven't been through the 90s, late 90s, you'll probably be blown away like I was seeing that kind of a thing for the first time. But I'm just saying that that's possible. So I know there's a lot of really serious problems out there, and I'm hedged. Remember, I've got VIX verticals on right now. So I'm hedged. But all I'm going to say is that don't count out this massive final push if we do get a melt up phase, because there's a lot of money to be made. If you think I'm out of breath right now and I'm tired, I probably am. But during those things, it'll make this week look like a regular week rather than a very, very active and dramatic week that it was in so many ways in UOA land. It really will. And so that'll be when you can make ridiculous amount of money in a short period of time. If, again, I can't say it will develop, I'm just saying if it develops. And so I'm actually hoping in a way that it doesn't, because usually the aftermath is horrible. On the flip side, I'm hoping in a way that it does because it'll be great trading, but I'd rather have good trading and not a crash, if you know what I mean. But I do think that could happen with the kind of situation we're in right now, because I don't know if the AI hype is being priced properly by the market. I don't know if it's honestly pricing it fairly or if it's way overpricing it. And I really am not the person that could say that. I know a lot of people are going to say definitely it's overpricing it. It's insane. But I don't know. I don't know how close they are to what developments. I really don't. All I know is that the charts continue to tell us to give the benefit of the doubt to the bullish side until we see some danger. And that's what I'm going to kind of close with here. Until you really crack below support, there's not a lot of danger here. There is some negative divergences. We did cover those, right? Those are pretty much present in the spies and the Qs. You see that the big dogs are being are not acting well. The only one that I thought looked really good right now was Apple. That to me has that break. I know it's because it's flatlined for 2 weeks, and we saw paper. If they goose this market, I think they're going to keep taking that thing up. That's one reason why I put that idea in. And the other thing is that it's very close to a high, and so I'd be surprised if it got this close and didn't challenge it. And I think it can definitely do that. And if you look at the line we have here in Apple, right, the long-term line that's up here, which I'll make blue, you can see there's tons of room. I hate that this thing switches to percentage. And I grabbed the wrong thing. But anyway, you'll get the idea of where that price is now. And you should have gotten it. Why is that still on percent? I thought I unclicked that one. Apply. Okay. Yeah. So, I mean, if we extrapolate this kind of a move, it's going to take us up, right? Probably about 30%, almost like the IWM. So 30% move in here. Now, I don't know. I mean, you got to get through earnings, which are coming up. But, as I say, I think these stocks, Apple's usually been over the years a good performer, leading into most earnings. As far as where they go past that, beyond earnings, I don't know. It is a little bit short-term overdone. Not going to say it isn't. This is also a little bit overdone, or getting close to overdone on bigger picture charts. Not quite there yet, but in the short run, it's a little bit overdone. You're at 71, and that's even after chilling out on, RSI for 2 weeks. You chilled out. But, to me, right, this is one that will mask a lot of problems if things do develop. Microsoft was also looking runnerish, but it didn't put anything together. I think the interesting thing about Microsoft, though, is I would put an alert on this one, because if they do need to, this would be one that's cheap enough where it's backed off enough from the high and treaded enough water that it's got energy. If they want to use that as a kind of like weakness masking mega cap, which I don't, you could tell me that doesn't happen. I think it does. So we disagree on that. But yeah, so I think that Apple, that this doesn't look as good as Apple because it's just been flatlining and it's not really busting through. But Apple closed strong, and it looks like it can possibly take that out at the top. So I think that's really it. But yeah, so I don't want to belabor that, but there's so many things to cover. I wanted to kind of share some different things with everybody and get some thoughts out there rather than just talking about the basic things, because we're far away, from these support levels. We need to really have it accelerate. I think you got to get above mid channel in these things, and to really worry about breaking down. Now, granted, there is negative divergence, so I'm not discounting that, but to really get the breakdown, you're going to have to crack the 20 and IWM that's on the upside of the channel. I mean, it's acting really well. It's not really overbought quite yet. So, I mean, to me, that's looking interesting. We did have a bull trade It exceeded the first three targets. I think that's all I was able to get in there under the time pressure that I was under at the time. The Dow, the same thing. You may as well wait on the 20 if you're going to worry about something. But the way that it closed and all that, and the way that some of these Dow type things are looking, the XTN, some of the financials, the energy a little bit, the XLB, the XLI, that's looking pretty solid. I've got to say, and look at the volume. So this thing really kind of is shining brightly right now. Maybe the Dow is seeing some money flow into it from some of those super megas that they're just again fanning out, and they're like, hell, like blue chips. Some of these blue chips are or theoretically at least blue chips are really a great value right now. That could be part of the whole mix of why those megas look a little susceptible. They don't look so wonderful at the moment as a package, and other things are starting to pick up the slack. And I think that's a great sign. That's what I wanted to sort of tie together with that really tremendous upside potential. So if they're able to start broadening this thing out, a lot of these megas do not really perform, but they don't crater, that would set you up for something really special because if they move a lot of other things up and start tacking it on, and you have a good finish for Ock and all that, and you get into Nova and things like that, assuming like the political stuff and all the other stuff out there, geopol doesn't upend anything, then they start bringing the mega caps back once the other things have really goosed. You could have, again, you could have that type of a super finish. So I'm looking forward to that. I just hope it doesn't get 1999 insane because if we keep getting just good push and we do our stock picking and using EOA and other methods to help us home in on what's interesting and maybe timely, it's going to be some really good stuff, I think. So I'm really looking forward to it. So on that note, I'm going to wrap it up. I'm sorry this went so long. It was a different kind of a video this week. I just didn't think I could do the summary the same way. I wanted to share a lot more flavor. There are a lot of concerning things out there under the surface still, like I say, percolating under the surface. The market continues to ignore them. We said that would happen probably because that's what the market typically does. It ignores things until it's forced to confront those things. And so those things have not manifested enough to make the market confront them. They could, but until they do, you have to just continue to go with what the charts tell you. And the bulls, even when they've been on the ropes, have been able to pull off the save like we noted last week. And even if it's sort of cheesy in the fact that you see selling all week and then you have 1.5 decent sessions, that keeps the trend intact. And these timely comments from Bassett and so on and so forth, it keeps everything intact. And then they just go, go, go. And so, that's the nature of a bull market, having been through so many of them. That's what I found to be the case every time, where you want to be prepared, but at the end of the day, as long as there isn't a crack in key support or a really serious news driver, you just got to keep going with what develops, and that is more uptrend stuff, type stuff, and it's the focus on what's working, and that shifts from big mega cap like we saw. It shifts to AI, it shifts to quantum, it shifts to chips, it shifts to cloud. Now it's shifting to small caps and infrastructure, like real in terms of XLB and things like. Oh, one final note. I think I had Target. I've been talking about this dog for a while, and it's maybe there, right? Just keep an eye. I would set an alert in Target as well. If they do start to bring retail back, that could be one that has room to run for about $6 or $7 towards the 50 if they start to really go after retail. Again, that's not happening, but the fourth quarter is where we are right now. Keep that in mind. And then this, I forgot to mention these, which is what I want. This is why it's so hard. I wanted to mention this and deer, and you can see that deer is really lagging behind cat, right? So I'm sure there's specific problems there, but look at this low and this thing's bouncing. So I'm not a big counter trend player, but this would be one where if you start to see that XLI and the Dow continue to power and all that, they might start coming for this, looking at it as, hey, this thing's a lot cheaper, right now this is a so-called value. So just another thing to think about that I wanted to cover, because we don't often get to cover all these names that we talk about. I know I mentioned this one earlier too, knee. This one here, just ridiculous move. And this is an example of where I wish I had the time and just had kept rolling, and I didn't. I think I can't remember the day I got out. It was a good pop. I was making money on my roll, so the initial thing worked. Then my roll worked, and I'm like, it's getting up near resistance. I don't have time. Let me just get out now, and I'll go back, get an alert on there, and go back. And then just got busy when the alert hit, and then he just jammed it right back through. Just jammed it right back through for another whatever $4 or $5. And that's why roll is so powerful. Not and you don't want to short circuit your rolling. You really don't, unless you really have a good reason. You just want to, if it's working, just keep going with it. But yeah, anyway, I'm going to end on that note. I'm sorry about the length. I'm sorry about the off the beaten path, but I do hope in some way this helps you this upcoming week or some week in the future. And I'm just going to say, for now, we're just going to stick with it until news changes the dynamic. We're just going to keep sticking with it. So on that note, thanks for tuning in. Everyone have a great and safe weekend if you get to watch the video soon.